Okay, good. So, well, thank you very much for the opportunity. And thank you, Dr. Crisp, for a fantastic presentation. So I just wanted to just, I suppose, give you a feeling for what's been going on from the world of the energy transition and the economy transition. I think I don't know all the nuances in South Africa, so firstly, I apologise for that. But I have done a little bit of research to add some flavour in there, and I look to others on the call to post some questions and to maybe have some insights so I can learn something as well, if that's okay. What I'm going to do, I'm going to take you through what's called a sustainability moment. ERM, Environmental Resources Management, is the company I work for, and people effectively are our greatest asset. So therefore, we start all of our meetings with either a safety moment or a sustainability moment to basically keep people safe and well. I'll take you through what the challenge is from a climate change and give you some context. And then at the end, I'll wrap up with the COVID impact and how I see, or how the COVID topic is going to influence the climate agenda. And then, hopefully we'll have some good questions. There were some punchy ones in the last one. I like that, and I like your style, so please keep those coming. The Kaiser Family Institute did some research. Maybe Dr. Crisp is familiar with this as well, around mental health. And if you look at this data that was collected back in March, over the space of one single week, the negative impact of being in lockdown had significantly impacted mental health. And it was, I suppose, a significant and statistically meaningful increase. That's something we should, as all professionals in our companies, reflect on. And I think one of the areas, again, there's some research that was conducted around supporting our colleagues around mental health, was around some simple things that we can do in our organizations and also with our interactions with other people. One is around sort of practicing gratitude, so thanking people, but in doing it yourself, you're actually making yourself feel better, people receiving it feel better, and we just become, I suppose, more balanced and content. Connecting with nature if you're able to, going out and enjoying, going back to roots, as it were. And an odd one, which I'm not really sure about, but I think it works, is around doing chores, which is basically repetitive actions that basically allow the brain to free up. There's a nice Dutch word, maybe it translates into Afrikaans as well, it's called niksen, which basically means to do nothing or to do something with no purpose, meaning sitting on a bench or just simply relaxing the brain is a way to sort of release what's going on inside, and as well as, of course, listening to music. I hope you can, we always do this in ERM, and I think it's a nice way to reflect on our own people and our families around us. So this is a quick overview for me. I won't go into any details. I've got I suppose, a broad risk management background, starting my career in engineering, then sort of getting seconded in the Middle East as a risk manager on a gas pipeline, so hard end of risk management. I then flipped. I wanted to learn about finance, so I in the operational risk teams within two companies, and now I'm heading up the corporate sustainability as well as some other risk roles. So the climate opportunity. So I think it is also an opportunity for companies and for countries to reinvent themselves for the better. I think all of you are familiar with the Global Risk Landscape Report. Again, I'm not going to hammer out or repeat from a risk manager's perspective that this is one of the most significant risks. I think we can agree it is a risk that we have to deal with, among other risks, of course, as well as trade relations between the US and China and other types of aspects. It's certainly a risk that we're all having to deal with. That resulted, or the risk profile and the increase of attention on the risk has led to international cooperation around the topic. And many of you may be familiar with the Paris Agreement back in 2015, and where 196 countries came together and said, we're going to do something, but we need to change the world and how we operate as an economy, and we need to decarbonize. And they put plans in by country to say what they're going to achieve. Now, they're going to miss the 2-degree target. They're actually aligned more to the 3-degree target. However, in essence, it meant that the world said, enough, and let's transition and move the economy. Many of us, I think you mentioned, if I reflect correctly, 60% of the people on this call are from the private sector, 40% in the public sector. We all have a role to play in the planning, in the finance, and how we how together, and as risk managers, what's your role in stewarding your companies and entities in a risk robust way as you go forward? So go to the next slide. So what is the size of the decarbonising challenge? So old, but it actually captures the essence of the problem. So if you look at 2007, for every dollar generated from GDP, so every dollar you earn in the economy, the amount of carbon released in generating that one single dollar was about 770 grams. Which is about, and when I was in South Africa, I did enjoy your wine immensely, actually. It's about the weight of a bottle of wine per $1 that you earn. So if you look at your salary, multiply that by a lot of wine, that's a lot of weight of carbon that released just to have your salary earned. What the challenge is, to get to the 2050 target, we need to convert that weight of wine down to the weight of a cork. So you imagine now you're only allowed to spend or generate a cork's worth of carbon, and that is a transformation of an economy to go from heavy carbon emissions all the way down to very, very low. And that is going to require huge amounts of investment. So just give one example of that types of investment, and I don't know whether there are any renewable companies on the call, but there is a huge demand in the renewable space, and they estimate, and there was a study done by Morgan Stanley, 14 trillion worth of investment required to meet the energy gap or the supply of energy in the renewable sector over the next 30 years or so. What that means is, you can see Africa there is a gap in terms of what is it kind of the direction that you need to go in, where you are today and where you need to be, which is, as I keep saying, it is an opportunity and it is a challenge. You know, they say there's opportunities of 14 trillion. Well, where there's 14 trillion opportunities, there's 14 trillion of risk. I think it was Newton that said you can't destroy energy, but you can only change it from one form to another. Same for money. It's an opportunity. There's also a downside risk as well. The climate agenda itself has generated numerous risks that should be appearing or could be appearing on all of your risk registers and all of your risk processes that you have, from stranded assets to market disruption from the customer side, legal liabilities, people suing you. You've had a problem, they'll just keep adding to your problems by suing you. And you can see cases in New York where states are being sued as well as companies themselves. And you may say, well, you know, perhaps in South Africa, you've got a dependent type of energy sector that's difficult to shift. Well, one of the areas that's discussed over here in Europe is having a carbon tax on the border. So if you want to buy a bottle of wine from France, or you buy a bottle of wine from another place around the world, if the carbon is not reflected in the pricing, then there'll be an additional tax included. And that's already seems to be going ahead, certainly within the EU space. So again, as an exporter of goods and equally importing, you've got to be very careful as a country on how that is both transparently reported as you move forward, but also what's the long-term strategy to decarbonise. Investors, I didn't realise that span around. Very good. Not my slide. You can see on the slide, we've got some investors that have made some very public announcements, and the quote here is actually old. There was a recent one by Larry Fink that they're saying that every single asset should have what's called an environmental social screening. From a risk perspective, that can mean human rights, it can mean climate change, it could mean plastics and circular economy, it could mean large-scale environmental pollution risk, etc., etc. And they're saying now that where historically, from a risk management perspective, maybe on a risk register, you might have one single risk around ESG, sustainability and environment. Now those risks are becoming, I say, more important. I've got a slide later on that explains actually exactly what that financial disincentive is, also as you manage your company's risk. The world got together, the G20 got together and created a standard to help companies understand and then disclose around the financial, the non-related the financial risks of climate change, and that was called TCFD. And there's a whole block for you guys to get your teeth into as an Institute of Risk that focuses around risk management and how to prepare for and steward your company going forward around this topic, but also it's a good framework. You can apply it to any other topic as well. Also, for some of you that you may or may not be aware, I know I'm going quite quickly, so if you bear with me, there is a standard that has been produced by the WBCSD, that's the World Business Council for Sustainable Development. They created a think piece guidance document linked to COSO, which is sort of ISO 31000 equivalent, but made sort of US focused, looking at enterprise risk management. And there is a document that shows some of the tips and tricks to get ESG into your enterprise risk management frameworks. Again, just a reference to and something for you perhaps to reflect on. I think there are some WBCSD members on the call today. Now, again, I did try to do a little bit of digging for the South African market. I apologize, it's not exactly new, but it's maybe giving a reflection of some of the maybe systemic risks or risks within your companies on this call that you may not have on your registers, or at least within your radar, and that's what's called underpriced carbon in the economy. What that means is, in broad terms, and I'm not an expert on the study, but I know the principle, is that it effectively, in the pricing of the products and in the pricing of your business models, in those countries, it is currently 90% underpriced on where it should be, in terms of if there was a regulatory intervention at 30 euros a tonne, that would be the deficit or the gap. Now, the problem there is that many companies in Europe are planning $100 a tonne of carbon emitted. So there is a huge potential cliff edge risk there. Again, as risk managers on this call, perhaps that's one that you want to have a look at in terms of the economy, and as regulators and countries continue to evolve. What can you do about that? Well, there's some. I'll just go through a couple of screenings you can do if you're a finance company on the call, or you're a company with lots of portfolio sites, etc. You might want to be doing some reviews of which of your assets are going to be winners in this new economy, which ones are going to be down in this economy. If they're up, how are you going to capture it? So it's not just about risk, it's about opportunity. Do you focus your strategy to capture the opportunity and divert resources? And from the risk side, do you exit those portfolio or those types of customers and rejig your business to dampen the impact? And from there, you can start to model what that looks like in terms of your forward projections, site level physical risk. Also, you can look at whether it's sea level rises, storm damage, fires, etc. Again, doing other portfolio review to understand where you should start investing additional money to protect your assets. There's lots of things going on around the world, lots of regulatory frameworks being developed or in the process of going forward to be developed. All of them, there aren't many in Africa. And again, I do apologize. I don't know exactly the South African market, and perhaps there's lots of activity. And again, I'm really sorry if I've missed it. But on here, what it's saying is that if you want access to international money, if you want to sell into markets where there is a structured framework around what does green look like, you will be impacted even though you don't have a framework yourself. So as risk managers in a company, that of course has an access to market risk that needs to be reflected both in your preparation and in your R&D, and how you're effectively also setting up your supply chains and delivering your products to the market, be it financial sector markets or being the non-financial consumer goods markets, etc. So a lot of companies have decided to change their business. They change their, they want to decarbonize, or they want to reduce plastics, or they want to create a circular economy in terms of their waste streams and start to give it to other industries, and use where a waste is a cost, they can make it into actually a product to sell, so they can convert a lot of good balance sheet impacts there. But often this change costs money. And I don't know whether you're familiar with sustainable finance, and more particular green bonds or sort of green finance. And there are some different mechanisms out there for funding. They're quite popular at the moment, and the growth has been exponential. What does that mean? Well, there's two sort of types of green finance that you can get, and whether you're a fossil fuel company in South Africa, or whether you're a consumer goods company, or whether you're a manufacturing company, you can get access to this finance. You can get access to it from private sector looking to invest in green product and green projects. You can get it from the public sector, so a lot of international finance. Places like EBRD or the World Bank or the IFC are always looking for projects to invest in. The problem is they have lots of money and not enough projects. So as a risk manager, again, if you're looking, reflecting on adding value to the organizations you work for, it's a risk that you're missing this cheaper finance. There's much cheaper finance out that you can get, often at longer dated money, so longer maturities, much more stable money sometimes, that actually is looking for targets. And again, something to be considered as you plan forward with your treasury departments or within your own strategy departments. Those bonds that you can do can be either use of proceeds, which simply is you take the money, you've got to prove exactly where you want to spend it. So if it's on energy efficiency or if it's in renewable project, it could be some retrofitting of some equipment, etc. You need to prove where that goes. The other type of finance is around KPI linked, meaning that if you say you're going to decarbonize by 30%, then you can decarbonize. You must decarbonize by 30%, which means you have to issue data, show that it's been independently verified, and then as long as you follow and track against that data, you're eligible for the finance to make the change. That is not just at the project level, but that would be at the company level. So it's a big commitment. However, the benefits, and I'm going to show you in a minute what the benefits are in doing so, not just from actually getting the finance, but also from a reputational benefit. So last year, what we saw was that in broad terms, you got cheaper money if you look for green finance than you did if you just issued a normal corporate bond. And the reason being is that the actual mechanism by which it was cheaper was that when you issue a new, let's call it a new bond, the amount of money you pay additionally when you issue it at the start is always a little bit more than if you could buy it what's called on the secondary market, so on the exchanges, on the fixed income exchanges. So when you issue a new bond, you pay a little bit more because it's just a little bit more risky to issue something new. With a green bond, that amount of money that you pay is a bit less, in fact, quite a lot less. So actually, you're getting cheaper money. The other area was that the oversubscribing. So at the moment, there was consistently, when you issue a bond, let's say you're an energy company wanting to issue a 1 billion bond, normal corporate bond, you might have 4 times people wanting to buy it, meaning people want to buy it and there's 4 times the money available, but you only have 1 billion. With the green bonds, they're seeing oversubscribing of 6, 8 times, 10 times. There's huge investor appetite for it. And what does that mean? As a company, it means that if it's oversubscribed, you can get much better terms in terms of interest rate, and you can reduce your cost of capital. So the result being is that you're getting cheaper money. You've made a statement to the market from a reputational perspective. From a consumer's perspective, you're seen as a green company or more green company. So you can leverage that position in how you sell and where you sell. So you increase your sales. So it's a win-win. You get top line benefit. You can reduce your costs because you're reducing often your energy bills reducing, or the waste has been reduced, and you get some benefit that way. And effectively what we're seeing, it's a win-win, and investors like it. It's been greened. It's lower risk from a credit risk perspective. You've reduced your risk profile of the asset. Just in the last few minutes, I know I'm conscious of time, and I've gone very quickly, so I do apologize. As risk managers as well, there's a lot around reflecting on the risk, knowing where the risks are. It's also about building engagement and capacity, not just from a risk perspective, but building up your leadership and understanding that that they're familiar with this topic and that they can drive the agenda forward, because it isn't going to go away. I'll explain the COVID moment in a minute about what the impacts are. Strategic alignment. So don't on one side create a strategy that says you're going to do something, but then be lobbying in the government or in New York against the regulations. So again, you need to make sure that whatever is done is lived and breathed through this process. You can develop frameworks, and there's lots of guidance out there around how to create an ESG framework, environmental social governance framework, or a green framework that will help you get access to funding. will help you know from a transparency and from a risk professional perspective, you want robust controls and you want robust systems and you want monitoring and you want KRIs and you want all the good stuff that gives you those board reports that you produce on a monthly, weekly basis to give those right types of dashboards to help navigate through this. Again, that reflects also around data and systems. And then again, how do you disclose? Where do you disclose, etc. And on the last slide, this is kind of to time. I hope I'm okay. Are people still there, by the way?
Yes, you are amazing. Carry on.
Yeah. All right.
Yes.
Because I've been talking blindly for 25 minutes. I hope you are still there, because that's be really embarrassing if not. But you are there, so that's really good. COVID impact on the climate agenda. So this is really important, and this is where I think, and I totally agree that the world has changed, and I see that with my children who are running around outside the door, and they may disturb me at any moment, so I apologize. The world can work together on a global problem. They did it with CFCs and the ozone layer, and then it kind of disappeared as the ability to move together as one. Now, of course, there's been some nuances. Countries have approached it in different ways, but the world together shut down. Vaccines, we hope, will be available to all, irrelevant of whether they're growing economies or developed economies. And again, we hope that continues, but all indicators are that they will. The world can implement step change regulation and restrictions with public support, right? If there are demonstrable health, safety, and social issues coming. Now, climate change is one of that. They are already present in Australia. You can see from the forest fires that have been happening, the floods in Bangladesh, and now you can see and you can argue biodiversity and the link from wild animals into this health situation is just another example of the human race's encroachment into the natural world. And again, it's that defined link between a clear and present danger, let's say, and the world's acceptance for step change regulation. And if climate, and it is going in that direction, you could see some very sharp regulatory responses coming very quickly. So as risk managers on the call, what are you doing about that? Do you know which areas of regulation could be a step change to your organization right now? And that's a question I posed to you for the Q&A. I thought I'd just turn the question and answer around, so I ask you the question. Another thing is government's always complained about austerity. We've got no money left. We've got no money left. We can't do it. They found billions within minutes. They created social programs. They flipped, they funded the health systems. They funded programs of vaccine research. They did it like that. They found money. They printed money. So why can't they do that with climate change? There's no reason now that the excuses of the past are no longer there. And therefore that's broken free in my view. Populations accepted some very stringent controls on their personal behaviors and freedoms. That wasn't possible. You can imagine a world when they say you cannot drive anywhere. We would have laughed at them. If someone said to me now, you can only use your car 3 days a week, I'd probably go, okay, I'll make it work. The human's acceptance of these changes is absolutely changed. Our acceptance of behavioral, let's say, constraints, which the climate change agenda and risks, that has to happen now. That there are going to be, whether it's flying, whether it's using cars, trains, etc. The acceptance of populations to these types of controls is there, and that will also incite governments to move quicker. Travel and ways of working will change forever. I think most likely is my caveat, so I'm not held to it, but I can see that that's already happening in people's conversations. I spoke to one of the CSO, so corporate sustainability officers, around what does it look like. Well, the sustainability agenda has been accelerated by this topic. So it's not just about the kids at school, it's about the middle-aged groups of people going, well, hang on, something's not right. And that's accelerated the need for change. And I ask you this question. I believe risk management missed COVID-19. I'm a risk professional for 20 years odd. I think it was missed. People knew it was there, but the preparation wasn't there in its entirety. And my question to you on this call is, have you missed climate change?
This is from Roxanne Moodley. She says, if I've done nothing to date on this topic, or very little, what would be the first steps for a company to get to grips with this?
Okay, great question. Okay, so firstly, there's several areas. I think there's sort of three sort of areas you can start to look at it. So you could do what's called an outside-in view. So as a company in your market, you have peers and competitors. So I would look at what is going on in your sector, what is going on with sort of comparable organizations within the South African context, but then also go wider if you're an international exporter and you've got some international supply chains, etc. Why don't you look wider and say, where do they sit in terms of their position statement and how they're reacting to it? So I would do this sort of benchmark of where you are compared to your competitors and where the expectations are also from your investors. If you're a listed company in South Africa or elsewhere in the world, have a look at what your investors are expecting. You may not be in focus yet. There is a whole action called Climate 100, which is focusing on the top polluters in the world, and some companies on this call may also be included. So I do the outside in. The other one is the inside out. So a lot of our employees are engaged in this, and what's their opinion about it? Do you want to go? Your employees go to work going, my company doesn't care. You can get great engagement by saying, hey, tell us about your thoughts around this and do some research in your company so that you can generate engagement and also generate the belief and purpose of your company so you can align it. So that's the first thing. That's around basically understanding the context. The other one is opportunities assessment of your company. So based on both your markets, based on where you sell into, based on attributes or the positions of your actual assets themselves, looking at your sort of legal position of where you might be exposed to potential legal risks. So it really is a risk and opportunities assessment based on those threats of climate change, carbon pricing, shifts of consumer behavior, etc. And there's a nice list. So that under the TCFD, the Task Force for Climate-Related Financial Disclosure, what you could do is do what's called a readiness review. So just take the requirements of the TCFD and compared, is climate in our strategy? Yes or no? Or for climate change and this agenda in my organization. The guidance around, and put some questions around, are we prepared? Do we have enough data? Is the risk management team aligned with the climate team if it's separate? And asking the right questions to the climate team? So basically it gives you effectively a framework review to know where your gaps are. And from that moment, you can decide, what do I need to do to upgrade my risk management and my overall processes? And then also, should I be diverting my business maybe away from fossil fuels, going into more renewables, doing other types of investments? I hope that helps.
Indeed, thanks, Alexander. Zaid Omar, he's got a question. As government, what regulations should we prioritize?
So could you just say that again? Sorry, it just dropped out at the moment that the important word was mentioned.
The question is from Zaid Omar, and his question is, as government, what regulations should we prioritize?
Okay, wow, that's a massive question. So there's several areas of disclosure. So one area of regulation would be for companies to formally disclose around the climate topic in terms of their annual reports. So that's one area. I know France has gone down that road. So from a government, from a regulator's perspective, get companies systemically to report on climate-related financial disclosure. So you can either follow the TCFD guidance as a reference document, and you get them to include that within their annual reports. So that's, many countries have gone down that road. There are the EU taxonomy. You may have heard about the EU taxonomy. That's basically it's a guidance document. It's a 600-page roller coaster of a read document, but basically it tells you what is green. It says if I'm going to buy a car and the car is 70 grams a kilometre, that is not green. If it's 49 grams a kilometre, it is green. So this document tells markets and it tells companies what is a green activity and what is not. And that's been supported, as an example, by the European Union as a way to give that kind of baseline of what's green and not. And one area of development would be for South Africa to develop, or maybe even adopt a form of that document to allow everyone a level playing field about what is green and not. Therefore, of course, if you disclose what you're doing around climate change, you have to then meet the tests of that, which would then mean you'd get some sort of surety that what's been said is correct. I mean, I'm not a government policy guy. There's lots of examples of policies in environmental law being written. I think certainly by collecting, I think South Africa, you must disclose scope 1 and scope 2 emissions. So some have gone further to voluntary on scope 3, which is basically supply chains and other. So again, there's a few areas you can definitely focus on. Absolutely.
Excellent. Alex, thank you very much.